Competitive compensation is 20% of the bidding price after materials, a common and competitive markup for subcontractors. Service work, such as electrical upgrades, is generally a consistent and reliable source of income. As a subcontractor, there are lower overhead costs. You will not have the same overhead costs, for example, insurance or office space, as a general contractor. If the company is successful, there may be opportunities for increased workload and compensation. As a subcontractor, you will not be eligible for employee benefits such as health insurance or paid time off. You may not be paid if the general contractor does not receive payment from the client. You will be responsible for any accidents or damages that occur while performing the work. Being incorporated could provide some liability protection, but it also comes with additional costs and administrative responsibilities. Whether or not it is a good deal depends on individual circumstances and goals. This deal could provide a reasonable starting point for income and experience if you are new to subcontracting. You may want to negotiate a higher markup or request additional benefits, for example, health insurance if you have established your own business. The incorporation requirement could provide some protection, but consider the additional costs and complexity if there are concerns about liability. Get quotes from other general contractors to compare the compensation and conditions. If the compensation is fair, you can still negotiate other aspects such as payment terms, liability insurance, and incorporation. Determine if this deal aligns with financial and business objectives. If there are any concerns about the incorporation requirement or other aspects of the agreement, consult with a lawyer. Let's delve deeper into the specifics, starting with a detailed look at the pros. Competitive compensation, the 20% of the bidding price after materials, serves as a common industry standard. This arrangement directly ties the earnings to the project's profitability. As the project's bid price increases, so does the potential income, aligning the subcontractor's interests with those of the general contractor. It's important to understand how this percentage compares to the typical rates in the specific geographic area and within the niche of electrical service work. Moving on to stable work. Service work such as electrical upgrades inherently offers a reliable revenue stream. Unlike large-scale construction projects that are subject to economic cycles and delays, electrical service work addresses immediate needs ranging from routine maintenance to emergency repairs. This constant demand contributes to a more predictable workload and reduces the risk of prolonged periods without income. This stability allows for better financial planning and resource allocation. Next, let's consider the advantage of low overhead. Subcontractors generally benefit from lower overhead expenses compared to general contractors. The subcontractor isn't responsible for expenses such as maintaining an office, managing administrative staff, or extensive marketing campaigns. This reduced financial burden allows the subcontractor to focus on the core competencies of electrical work, potentially leading to higher profit margins. The lower overhead also allows the subcontractor to be more competitive in bidding for projects. Now onto growth potential. Successful partnerships with general contractors can pave the way for increased workload and subsequently higher compensation. As the company's reputation grows, the subcontractor may have the opportunity to take on more complex and lucrative projects. Moreover, a strong working relationship can lead to referrals and recommendations, expanding the subcontractor's network and creating further opportunities for growth. Success in this role opens doors to specialization, advanced training, and even the potential to scale up operations. Moving on to the cons, it's important to address the potential drawbacks. One significant disadvantage is the absence of benefits. Unlike employees, subcontractors typically do not receive employer-sponsored benefits such as health insurance, paid time off, retirement contributions, and disability coverage. This lack of benefits places a greater financial responsibility on the subcontractor, who must independently secure these protections. The cost of these benefits should be carefully factored into the overall assessment of the deal. The risk of non-payment is another serious concern. Subcontractors are often vulnerable to non-payment if the general contractor fails to receive payment from the client. This can occur due to various reasons, including client disputes, project delays, or the general contractor's financial instability. It's crucial to have contractual safeguards in place to mitigate this risk. These safeguards may include clear payment terms, lien rights, and the option to pursue legal action in the event of non-payment. Next, we have liability. Subcontractors bear the responsibility for accidents or damages that occur during the performance of their work. This includes personal injuries, property damage, and any other liabilities arising from the electrical services provided. Adequate liability insurance is essential to protect the subcontractor from potentially devastating financial losses. The specific types and levels of insurance coverage should be carefully evaluated in consultation with an insurance professional. Let's now discuss the incorporation requirement. While incorporation can offer liability protection, it also entails additional costs and administrative responsibilities. The process of incorporation involves legal and accounting fees, as well as ongoing compliance requirements such as filing annual reports and paying corporate taxes. It's crucial to weigh the potential benefits of liability protection against the costs and complexity of incorporation. It may be necessary to consult with an attorney and an accountant to determine the most suitable business structure. Determining whether this offer constitutes a good deal hinges on a thorough assessment of individual circumstances and goals. If you are new to subcontracting, this opportunity can provide a valuable starting point for gaining experience and establishing an income stream. It allows you to learn the ropes of the trade, build a reputation, and develop relationships with general contractors. However, it's important to recognize that this initial arrangement may not be the most lucrative option in the long run. If you have already established your own business, you may want to negotiate a higher markup or request additional benefits. An experienced subcontractor with a proven track record can command a higher price for their services. Additionally, they may be in a position to negotiate benefits such as health insurance or profit sharing. The negotiation process should be approached strategically with a clear understanding of the subcontractor's value proposition and the prevailing market rates. If there are concerns about liability, the incorporation requirement can offer some peace of mind. Incorporation creates a separate legal entity shielding personal assets from business debts and lawsuits. However, it's essential to understand the limitations of this protection. For instance, it may not protect against personal liability for negligence or intentional misconduct. Furthermore, the costs and complexities of incorporation should be carefully considered before making a decision. When evaluating this opportunity, several recommendations should be taken into account. Firstly, research the prevailing rates and conditions for subcontractors in your area. This will provide a benchmark for assessing the competitiveness of the 20% markup. Reach out to the general contractors and inquire about their standard compensation arrangements. Online resources and industry associations can also provide valuable data on market rates. Secondly, negotiate the terms of the agreement. Even if the 20% markup seems reasonable, there may be other aspects of the agreement that are open to negotiation. These aspects may include payment terms, liability insurance, and the incorporation requirement. Be prepared to make counteroffers and compromises to reach a mutually agreeable arrangement. Thirdly, align the deal with your financial and business objectives. Consider your long-term goals as a subcontractor. Are you looking to build a sustainable business, accumulate wealth, or gain experience for future opportunities? Ensure that the terms of the agreement are consistent with these objectives. If the deal does not align with your goals, it may be necessary to walk away and seek other opportunities. Finally, obtain legal advice from a qualified attorney. An attorney can review the agreement, explain the legal implications, and advise you on your rights and obligations. This is particularly important if you have concerns about the incorporation requirement or other complex legal issues. Investing in legal advice can prevent costly mistakes and ensure that your interests are protected. In summary, this is a complex decision that requires careful consideration of various factors. By thoroughly evaluating the pros, cons, and recommendations outlined above, you can make an informed decision that aligns with your individual circumstances and goals. Remember that the best deal is not always the one with the highest compensation. It's also important to consider the stability of the work, the level of overhead, the potential for growth, and the risks involved. The initial assessment of the 20% offer should be supplemented with a detailed analysis of the specific scope of work, the project timeline, and the general contractor's reputation. Obtain a clear understanding of the types of electrical services that will be required, the estimated number of hours per project, and the payment schedule. Inquire about the general contractor's payment history and their relationships with other subcontractors. A reputable general contractor will be transparent and forthcoming with this information. It's also important to assess the potential for future work with the general contractor. A long-term relationship can provide a consistent stream of income and reduce the need to constantly seek out new projects. Inquire about the general contractor's plans for future growth and the potential for the subcontractor to participate in those plans. Consider the geographic location of the projects. Travel time and expenses can significantly impact the overall profitability of the deal. Determine the distance to the project sites and factor in the cost of fuel, vehicle maintenance, and any overnight accommodations that may be required. Also, assess the potential impact of travel time on your work-life balance. Evaluate the general contractor's safety record. A safe work environment is essential to protect the subcontractor from injuries and liabilities. Inquire about the general contractor's safety policies and procedures and ensure that they comply with all applicable safety regulations. A commitment to safety is a sign of a responsible and reputable general contractor. Obtain copies of the general contractor's insurance policies. Ensure that the general contractor has adequate insurance coverage to protect against potential liabilities. This includes general liability insurance, workers' compensation insurance, and auto insurance. Review the insurance policies carefully to understand the scope of coverage and the limits of liability. If the general contractor requires the subcontractor to obtain their own insurance coverage, compare the cost of the insurance premiums to the potential benefits of the deal. Another critical aspect to consider is the payment terms. Payment terms dictate when and how the subcontractor will be paid for their services. Negotiate payment terms that are favorable and realistic. For example, you may want to request progress payments based on the completion of certain milestones. Or, you may want to negotiate a shorter payment cycle. Ensure that the payment terms are clearly defined in the written agreement. If the general contractor offers early payment discounts, evaluate the financial implications carefully. An early payment discount can be beneficial if you have a strong cash flow, but it may not be worthwhile if it significantly reduces your profit margin. Consider the tax implications of the subcontracting arrangement. As a subcontractor, you will be responsible for paying self-employment taxes, which include Social Security and Medicare taxes. You may also be required to pay estimated taxes on a quarterly basis. Consult with a tax advisor to understand your tax obligations and to develop a tax planning strategy. If the general contractor requires the subcontractor to use specific materials or equipment, assess the cost and availability of those items. Ensure that the materials and equipment are of good quality and that they meet all applicable standards and regulations. If the general contractor provides the materials and equipment, clarify the terms of ownership and responsibility for maintenance and repairs. Consider the potential for disputes with the general contractor. Disputes can arise over various issues, such as the scope of work, the quality of workmanship, or the payment terms. Establish a clear process for resolving disputes. This process may involve mediation, arbitration, or litigation. Ensure that the dispute resolution process is clearly defined in the written agreement. If you have concerns about the general contractor's business practices, conduct a background check. A background check can reveal information about the general contractor's financial stability, legal history, and reputation. This information can help you assess the risks of entering into a subcontracting arrangement. Consider seeking advice from other subcontractors who have worked with the general contractor. Their insights can provide valuable information about the general contractor's business practices and their relationships with subcontractors. If the general contractor requires the subcontractor to sign a non-compete agreement, carefully review the terms of the agreement. A non-compete agreement can restrict the subcontractor's ability to work for other companies in the same industry. Ensure that the non-compete agreement is reasonable in scope and duration. If you are unsure about the terms of the non-compete agreement, consult with an attorney. The decision of whether to incorporate as a subcontractor depends on a variety of factors, including the level of liability you are willing to assume, the cost of incorporation, and the tax implications. If you are concerned about protecting your personal assets from business liabilities, incorporation may be a good option. However, it's important to understand that incorporation also involves additional costs and administrative responsibilities. Before making a decision, consult with an attorney and an accountant to discuss the pros and cons of incorporation. The most important thing is to make an informed decision that is in your best interests.